Joining us right now to talk more about the funding fights in Congress and the possible market impact is Dan Clifton. He is Strategas Securities head of policy research. And Dan, what do you think? Shutdown going to happen? How likely?
Well, good morning and Happy New Year. I hope everybody got rest over the holiday season because January is going to be action-packed. You have the funding cliffs, you have the Republican primary starting, you have the Taiwan election. So you're going to see a much more outsized role of geopolitics and politics in 2024 than you saw in 2023. And that's going to start right away with how these negotiations are going over the next couple of days on the border and Ukraine. And in fact, the Republicans are unlikely going to be able to do a deal if it's not going to meaningfully reduce the amount of immigration that's going to happen at the border. The Democrats are going to be unable to do a deal if they're not going to get their priorities through as well. And so these are very hard decisions to make. We've been fighting over immigration for 20 years. We're going to try and get an agreement on that in a week from now, and then have it pass the Senate and then go to a more conservative House, which has very narrow margins between the two chambers. This is going to be a very delicate process. I would assume there will be noise. And if we get that, then maybe possibly we can have a government funding deal. But Becky, I want to be very clear here. This is an election year, and there is going to be a lot of volatility over these funding cliffs. At the end of the day, Congress has no choice. They will have to get something done, even if we do have a shutdown. What we've been talking about with our clients is that in election years, re-election years for presidents, we've had the S&P 500 increase 16 times out of the last 16 presidential re-election years. And some of those years have happened even when we had a recession. So at some point, 435 members of Congress and a president of the United States are all going to come together and be able to get this done. But we expect this to be a pretty volatile first quarter. And these funding cliffs are the center of that.
It's going to be real messy, but it's not going to matter in the end. The market's going to go up anyway.
That's right. I mean, and it ebbs and flows, but the president has enormous tools to impact fiscal policy outside these funding cliffs. You're already seeing that. You were just talking to Steve Leisman about the Fed cutting rates. We're probably going to see QT slowing down. These are all tools that could be employed to help the economy, even if the funding cliffs do start to impose austerity.
But Dan, let's go back to that. You're saying that's the president's tool. It's not the president's tool. How do you expect the Fed to react? They say that they're independent, that they don't care about these things. How do you anticipate the Fed's going to react in an election
Absolutely,
year?
Becky. And I didn't mean to imply that Jay Powell is trying to help the president, but there are powers outside the Congress is what I meant. Look, the real Fed funds rate is over 5%. The inflation rate is 3%. That means the real Fed funds rate's going up. And the Fed is likely going to cut interest rates in 2024. The Treasury is providing significant liquidity by funding the deficit on the short end of the curve. We're going to get a student loan cut in July that is already put into place. You have all the president's infrastructure financing coming into effect in 2024, and it doesn't require any act of Congress. So when we talk about these tools, we're talking to them about as a collective group. And I didn't mean to misspeak and imply that the Fed was trying to help.
No, totally get it.
Dan, in addition to this border issue, we also have a lot of discussion over what the top line funding numbers should be. Sure. And as part of that, there's this continued fight over the IRS funding. Now, the Republicans got $20 billion of that 80 taken back. Now, I guess I hear they want to maybe accelerate that. It was supposed to start 2025. They want to maybe start it this year. How important is the IRS now as a pawn in all these budget discussions, and why is it so important to the Republicans?
Yeah, so just as context, the Republicans were able to get $20 billion of the $80 billion removed as part of the debt ceiling deal, but the Democrats insisted that be on the out years. I think it's very unlikely the Democrats will sign another bill with more IRS funding being accelerated, and that's outside the normal appropriations process. So that will start. You'll see some negotiations over what their normal budget is going to be as part of the appropriations process. But what you're talking about, Robert, is very, very difficult to achieve. What are going to be the spending levels? Are we going to do all the appropriations? If we do, then we avoid sequestration. If we're going to have a partial shutdown or a shutdown or even a continuing resolution, you then start to set up for an April 30th sequestration, where you get a 1% spending cut off the 2023 levels. It's not going to be the end of the world if you get it. It's much smaller than what we saw in 2011. You have other factors that are coming into place, but you can see what we're setting up here. Budget trench warfare. immigration, IRS, Ukraine funding. All those are very, very difficult decisions for members of Congress to make that could upset their base. And that's why these are going to be protracted fights in the first quarter of this year. Interestingly, you'll start to see the presidential election mix with this. And I think that's the key. It's the confluence of these factors. You usually get a pretty significant sell-off in the equity market right around Super Tuesday as the new candidate begins to emerge and the market begins to say, okay, which Trump's policy is going to be, or whoever the Republican nominee is going to be. And you've generally seen that historically.
That's interesting. I didn't realize that. Is April 30th, the sequestration, no budget deal getting done, is that your base case, or is that a long shot idea?
Yeah, I would assume that we're probably going to not get all the appropriations bills done. And if all the appropriation bills are not done, then you get a 1% cut across the board. I would put that in as your placeholder until we see these debates play out. But if we get closer and that pressure starts to ramp up and it is election year, you could save it. And from a macro perspective, Becky, it's not the end of the world. But for defense, it's about a 4% swing one way or another. So it could have a meaningful impact on defense, and it could have an impact on healthcare stocks. So on a sector basis, it's going to be much more meaningful than on a macro basis.